All right, we're here again. And this time we're going to do a series on admitting a new partner. And this is part one in that series. And here we're going to look at why we need to admit a partner and possibly one method of admission. So the question, as I started out then, was why do you need new partners? Why would you need new partners? Well, an entity may seek new partners for several reasons. One could be it wants to raise new or additional funding. Maybe you're thinking about expanding your business and you need some more capital funding, so you get some partners to help you out. You may want to increase your efficiency. So, your operation could do with a little input, a little more organizing. So you're looking at the management skills of someone and invite them to be a partner to help you through that process. Or you may want to benefit from the expertise of others, of the others in other areas of business. For example, you may get a partner who's skilled in marketing, help you spread your product a little further, right? Or someone who has real human resource skills and knows how to motivate the workers and get them to work a little harder, right? All kind of factors are there. And they're possibly the same reasons that a sole trader would want to have a partner. A partnership may want to have more partners. All right. Now the question then is, there are basically two ways for a new partner to gain entry into an existing partnership. Two ways. Either by obtaining a percentage of an existing partner's interest in the entity, and what we call that a private arrangement, or by obtaining a percentage of the entity's interest. And you would do this in exchange for some capital contribution, whether it's in the form of money or assets, like other resources. All right. Today, however, we're going to focus on the admission of a new partner under a private arrangement. So we're not looking at the other scenario, just the private arrangement. And we're going to use this example as our guide. So we have A and B are partners in AB Bodyworks, where they had capital contributions of $40,000 and $30,000 respectively. They share any profits and losses in a 3:2 ratio. Now on January 1st, 2024, A invited C to join the partnership and agreed to sell C 35% of his interest in the business for $25,000. So you can see this is an arrangement between A and C. Therefore, in a private arrangement like this, you need only to disclose the amount of capital that partner A is going to transfer to partner C, which basically is the 35% of his $40,000 in the business. And when we calculate that, that's $14,000. That's all you need to reveal. Anything else, including the extra money that he may get, is part of his private arrangement with C, and therefore should not be disclosed in the entity's books. In other words, should not appear in AB Bodyworks books. All right, therefore, the journal entry for the admission of partner C would just be as simple as this, right? You'll debit partner A by the amount that partner A is giving up and credit partner C with the amount that A has given to C. and simply record that partner A transferred that portion of his interest in the business to partner C. It's as simple as that. And so, if you take a snapshot of the balance sheet, it should reveal no change in the net assets. So the net assets of this business was 40,000 plus 30,000, which is 70,000. So there shouldn't be any change in the net assets. But what you will see is a change in the capital because now C is part of the business. So what we will see then is, as we said, the assets will still be 70,000, but now A's capital, which was 40,000 before, is reduced to 26,000. B had nothing to do with what's going on, so B's capital is still 30,000, and C is allowed into the partnership with the 40,000 that was transferred from A. Notice there's no mention of that money that C paid out to A. I mean, in reality, A may have given B a little something and said, well, you know, there's my partner, whatever, and give a little something for allowing C to come into the business. But from a accounting perspective, no need to display anything. All right. Well, we will continue to examine the admission of a new partner to the business in our next episode. So I hope I'll see you then. This has been a production in association with TV Barbados.